Morning traders, I'm Greg McKenna. Welcome to Markets Morning. Another tumultuous night for stocks. It could have been much worse. Things were looking a little bit funky with an hour or so to go on US stocks. They tried to rally, failed, and were looking quite tenuous. And then we got the headline that President Trump and President Xi are actually going to meet on the sidelines of the G20 meeting. And that really lifted things. We had the Nasdaq, which had been down 2.2% at one point, got up to about down 0.6, 0.5, maybe even a little bit higher. It ended up down negative 0.12. We saw a bounce in the S&P, but in the end, it closed down 2. We saw the Dow bounce too, but in the end, it closed at 2%. US 10 years are at 3.15. My price was off yesterday, so I do apologise for that. They were lower yesterday morning than what I could see on my screen. I closed it and reopened it, and then some lower numbers. Some lower numbers were there. So where are we now? The US dollar's weaker. I think a lot of that is because of what President Trump is doing. He's doing to the Fed. He's doing to perceptions about the Fed. He's doing to perceptions about interest rates. I think that's a big key driver. Of course, we've got the weight of positions. Long US dollars. Short euro last week. Heavily short Aussie. Heavily short Kiwi. Lots of different markets. Heavily short yen, so of course the yen's back down at 112 and not far off yesterday's lows. Gold. Yesterday, I mentioned yesterday that this video is just a stream of consciousness, and it's not scripted. I have no idea what I'm going to say. Once I get past morning traders, welcome to Markets Morning, or whatever I say, I don't know what I'm going to say. And so yesterday, when I said that I thought gold could rally to the top of that line about 14 or 15 bucks, I did not expect that it was going to go 27. I genuinely thought after saying it that it was going to rally, but not as far as it did. Gold's at 12.22. We'll talk about that 2 minutes in. Let's dive straight into the charts. I'm going to start with stocks, then we'll do foreign exchange, then we'll do commodities, then we'll have a look at Bitcoin, and then I'll say, look out, it's a really interesting end to the week because we've got earnings season. So fantastic. Anyway, let's go. Here we are. S&P 500 daily. What do we got here? We have, if you look on the weeklies, and I've tweeted this and included it in my Markets Morning, we've got some signs of support coming in for the S&P 500. Of course, it's below its 200-day moving average, and it's sitting on this 50% of this most recent move. For me, I think it's still got lower to go, but I'm respecting that. So last night's low for me is the level to watch. It would have to get through last night's low to really kick on. And last night's low, remembering this is a futures-based CFD. 27.12 is the level to watch. We've had a pretty good move lower. And so, the question is, can it continue? Of course it can. Crashes happen after falls. They don't happen from highs normally unless it's a fat finger. So that's what we've seen. We saw these falls and we saw this collapse. That's a nice rally in the last little bit of that. So keep an eye on that. But 27.12, if we take out last night's low, it's ugly. Otherwise, I think we can form a bottom here. In terms of what that means for the local market, actually, I'll go to the Nasdaq next. Nasdaq 100, this is not the composite. Similar kind of story. If you have a look at the weeklies, this is a market where the rally has gone from flat to more steep to steeper to steeper to steeper, and it's broken. Right, so we've broken that one, and then we can just draw in a few other trend lines. We can have that one there, which isn't far off, right? So we'll say that one's the latest one. So 6833 in a Nasdaq 100 futures sense is the level to watch. But if you have a look at the MACD here, or you have a look at the MACD on the S&P, and you think about what I said about gold yesterday in terms of the weeklies, what I say about oil and other things, about what the MACDs do, there is a chance of a rally. For the local market, it's fallen so fast. There's no sign of a turn in the MACD yet. When you think about it, if you have a look at it on the weeklies, it's broken down, and you could probably see this level here as your target. So if you think about the fractal will be where that low was, 5679. So within 100 points of where we are is where I would expect support to come for the local market if it doesn't already come. Gold up 2 point something %. Copper up 1.5%. You know, we've got those two factors. The US dollar's a little bit weaker, so the Aussie's a bit higher. That could be a bit of a handbrake. There's still this funkiness. But dollar yuan, let's go to dollar yuan. I'm probably going to jump around a bit more today. Dollar yuan, which was trading in CNH terms, so that's offshore, was trading at 694 at one point. There it is, sorry. 694 at one point. So this is the daily. Right, up at the top of the channel, now it's back at the bottom of the channel, 687. So is that a sign that Chinese stocks are going to find a bid today? Now, I could be drawing lines, drawing bows, drawing whatever it is all over the place, pardon me, at the moment. But, you know, this is the zone, this 100 points, after this big fall, this 100 points is the zone where we will find some traction. If the MACD goes negative, though, we will know that things are looking poor both here and across the globe. So in many ways, it's about what US stocks do tonight. Now the DAX, see, that's a very interesting bar, isn't it? Very indecisive, a big fall, but then a bit of a rally too. So on balance, a negative day, and when we look at it, it's broken down. So let's keep an eye on the DAX. I'm going to update my weekly. This is the guidepost, folks. This is the guidebook, I should say, that helped me make all of the big calls that I made this week for 2795 on the S&P, for oil, those kind of things. Even for, you know, euro turning slightly and sterling and those kind of things. Without doing this 6 or 8 hours every Saturday, Mrs. McKenna doesn't like that very much, but if I didn't do that, I wouldn't be able to do this. So anyway, I'll keep an eye on the DAX. I'll form my view more broadly on that tomorrow. Now, let's have a look at some currencies, because I know that's what most of you trade. So you can see that we've just got this little rounding here. If I drop down, I'll just get rid of that. So you can see here before I go, it's stopped at the 76.4% retracement. And so what we've got now, if I drop down to the 4 hours, and if you're wondering why my hair's wet, folks, it's because I get up at 4 o'clock, sit on the bike, exercise while I research, and I had a hat on, and the hair looked terrible. Anyway. So what have we got? This is very steep. So let's just draw a little 4-hour trend line here. And we'll say that the first sign of a change, we'll take out that low. So take out that low from last night. That's 115.72, and we've got 115.70. So let's call it sort of 60.65. If 115.60.65 gives way, then that would be a sign that perhaps at this 38.2% retracement of this move from the post-Fed highs is exhausting itself. This would be a reasonable place. If this is just a garden variety pullback within an overall down euro trend, this would be a reasonable place for it to pull up. And you can see that there. Elsewise, it can run to 116.74 and maybe even sort of 117.50. That would not be beyond the realms of possibility, depending on what President Trump says, what happens tonight, what Larry Kudlow says, those kind of things. Don't forget that Esther George last night said that rates will go higher because the economy needs it, because inflation is coming, all words to that effect. We're not focused on that at the moment. The market is focused on thinking about what Donald Trump means for the Fed, and that is hurting the US dollar. So here we have this this pullback in dollar yen. We're back down now to the last line of resistance, 111.96. I think we talked about that yesterday. It's holding for the moment. But 111.35 and then possibly into that 110.70, 110.40 region. The MACD still suggests that we might see that a move back above 112.45 in the short term would probably change that outlook. Stocks could bounce into Friday night. Earnings, JP Morgan out tonight, could be good. I don't know. We'll have to wait and see. Sterling is just grinding higher. I've been talking about this move back towards 133 all week. We're at 132.30, so we're within sort of 50 to 60 points of that high over here, which didn't quite make this 113.20 region. This is going to be tough to break, but a deal does feel like it's coming, even as Tony Blair says 50-50 for another referendum. Even as the DUP makes noises about an early election, politicians are politicians, and they will go out of their way to scuttle anything that causes ructions on the island of Ireland, and you can understand that in many ways. So the politics remains important. At the moment, the price action is getting back towards our target, so it's a time to be cautious. I'm overly cautious, as a couple of people reminded me yesterday, as stocks fell further and as oil completely fell out of bed overnight. But that's the way I trade. One of my primary rules, I learnt getting woken up in the bond market funk in 1994 or whenever it was, had some panicky kid, I was only a kid myself, had some panicky kid saying, you've got to get out, you've got to get out. I'd had a call level rather than a stop loss. And I just thought to myself, no way, he's panicking too much. It's the middle of the night. I'm just going to leave it. And so after that, I kind of have always felt you've just got to have the position so you can walk away from the screen or sleep at night. And that's one of the reasons why after big moves, I cut my position back. I know it's counter, means I've got to be right more. I understand that, but I think if you watch this video, if you read my stuff, the rightness is okay. I could probably make more money, but would I be able to sleep at night? Sometimes not, because one of the hardest things for any trader is staying in a winning trade. And I recognize that, and that's why I chop it down to 50% or 25% and then just let it run. Anyway, what do we got here? We've got the Aussie. We've got the Aussie trying to break out. We've got our fractals at 71.30 roughly. And so if we get up through 71.30, we can run towards 71.60. This is a nice triple bottom here. We're on the 4 hours here, folks. Sorry, beg your pardon. You can't see much on that, other than if you look at the dailies. Other than it can get to sort of 71.70, 77.90 is kind of the 30 day EMA, and then the stop and reverse, the parabolic. So that's probably where very, very short term you could see a flip in the Aussie and maybe some squeezing. But for the moment, it's got to get up and through 71.30. I wouldn't be surprised if somebody has a crack at that, but whether or not it can go is another story. Dollar CAD. So that's the weekly, of course, from yesterday. Only off a bit. So whereas the Kiwi made 1.1%, the Aussie made 0.8, 0.9%, the CAD only made about 0.2, 0.3, which was similar to what sterling made. So that may come back to test 129.50 or thereabouts. We'll see. I don't have a strong view on CAD. I'll have to have a look over the weekend and just see if I can get a better handle on that. Kiwi, like the Aussie, has rallied, although the Kiwi managed to stay bid yesterday in many ways much better than the Aussie, and then it's run harder. It's now back at the 38.2% retracement of this move. These are those garden variety moves that I was talking about. The MACD's back in positive territory. It's gone a little bit too steep. So somewhere between 30 and 60, I'm thinking, unless the US dollar falls out of bed, it might run into some offers. Now, XAUUSD is GOLD again. We can say that 20 times. This is what I love. This is why I do this video. I do this video as much for you as for me as I do it for you. The stuff that I say here, I don't know that I'm thinking half the time. I do know that I'm thinking, but you know what I mean. If I say it in the video, then I do it in my trades. That's the rule. And so that's what we've got to do. So it broke higher than where I thought. It's got through that 12.15, 12.20 region. Will it pull back? At some point, it will likely pull back to retest. And if stocks manage to rally as they might, then it probably will reverse. So, for me, long gold, take some profit because 12.40, 12.50 to me is a bridge too far for gold. And if it gets up there with, what remains of the position, then obviously that's happy. But I don't expect it to break that at the moment. So we'll keep an eye on that one. But that was just a great technical break. Support, and it just looked like it was going to break yesterday. It was just that kind of feeling in the market. Copper had a good night, so a head fake yesterday, a bit like that Aussie down at 70.40. Down she goes, up she bounces. And why is that? Obviously, the President Trump thing today is pretty good, but copper had already rallied. Obviously. The US dollar being weaker is good. Chinese stimulus that's going to come through, that seems to have been something that's got the attention of copper buyers. Plus, of course, what I mentioned earlier in the week about LME week. But at the moment, it still looks like it might head lower. But I'm not doing anything in copper at the moment. Brent and WTI both collapsed last night. Look at Brent first. So Brent does look like it still could go a little bit lower. That's just around the 38.2% of the move, 80.28. So, you know, here was I thinking, saying sort of 80.50 was a big deal, and it's obviously collapsed down and through that yesterday. It can go lower. 79.22 is, or is that, no, sorry. If we're looking at that, it's down at this level here, 78.20, beg your pardon, is the next kind of level. If it breaks down through there, then you're a bit of a shot duck, because it does look like it's rolled over in many ways. In terms of WTI, if I can find my chart, there we go. WTI is coming back towards a confluence of support, but it's still got further to go by the looks of things, possibly on a MACD sense. At least we'd need in this zone here. So from the support point of view, if I can find it, yeah, 70.20 to 70.25 is kind of support. We're at 71.11. That's probably in between these two trend lines. I'd expect it to pull up. If it does not, then it could fall substantially further. Right, what's left now? 16 minutes, probably not much. Bitcoin. Let's just quickly have a look at Bitcoin. Fell completely out of bed. You've really got to drill down and build up. So you had this, you know, and the brokers, Bitcoin is only 5 days a week, not 7 days a week, which is Bitcoin. So it is prone to some change sometimes. But essentially, you've got this little move across here, and then when it busted that little line there, it collapsed yesterday. It was down 7% at one point. It was down at 6,100 or just below on Reuters. It's now down at 61.88 on Reuters right now as I'm looking at 62.49 here. These are wide spreads on some of these cryptos. It does look in danger, but 56.50, 57.50 has to break. Anyway, that's it from me. Trying to catch a falling knife is a bad idea. But collapses, crashes are events, whereas tops are patterns, if that makes any sense. And so there are some signs that potentially, on a weekly basis at least, that perhaps the S&P, as the global leader, could stabilise around here. But I would say to you that my normal trading style, which uses the MACD and trend lines, says last night's low has to hold, otherwise some substantial further falls, in which case I'd be looking for a move down towards sort of 25.89 or thereabouts, maybe even lower, is on the cards if we break 27.12. So 27.12 last night, futures terms, don't forget, has to hold. So we'll see how that goes tonight, but a big end of the week again. Another big Friday. So good luck, folks, and I'll be back Monday, and I'll see you then. Bye for now.